Hello friends, welcome to another edition of Who's Hating Hard on Tesla Today. Does Tesla have a demand problem? This is a question that people have been asking and answering for a long time, making predictions about whether Tesla would grow in the future. And today's featured hater on Who's Hating Hard on Tesla Today is Brad Munkin. Before I get to him, let's check in on Loki and see how he's doing in his dog bed. You can barely even make out his ears on the Loki cam right now. He is in the second of his 3 dog beds. Friends, Loki has 3 dog beds to choose from. This is the darkest of those 3, which may be why he's in there, trying to catch a little bit more shut-eye. So I'm going to share my desktop with you, and we'll start off with a tweet that Motorhead, Brad Munkin, directed my way. He calls himself Motorhead on Twitter. So we should be buying hashtag Carvana here, hashtag Tesla hat tip Ricochet Rowdy. So what's the hat tip Ricochet Rowdy about? That means that Ricochet Rowdy sent this screenshot to Brad Munkin saying, haha, we should roast James over the bad advice he's giving people on Twitter. Well, out of context, this looks like bad advice on Twitter. The lower the stock price goes, the lower the risk of buying it, and the greater the potential return on investment. So that's what the Carvana business is about. They're in really bad financial shape, and their stock is down a lot. This tweet makes a lot more sense if you view it in its original context, which I will do for you right now. This is the context of the tweet as a reply way down the thread where I was saying, hey folks, 3.5 years ago, coincidentally, Tesla was trading below $180 per share. That was before a 5-for-1 split and a 3-for-1 split. So Tesla's up a 15x since then. And just trying to reinforce the idea that the investing axiom is buy low, sell high for a reason. And the reason is that people don't want to buy when it's low. This is investor psychology. It's strange. There's a meme about this where there's 2 tables set up. One that says Tesla trading at all-time highs, and there's a very long line of people with their money in hand waiting to buy Tesla at all-time highs. And the other table is Tesla at 52-week lows, and there's nobody in line, right? Nobody wants to buy when the price is the lowest it's been in a year. Because they think it's going to go lower, right? That's the point of the tweet. So Hernan was just asking, you can pause this and read the whole thing if you want, just asking, hey, risk-reward was better back then because there was a chance Tesla would go bankrupt, and today there isn't that chance. So are we taking more of a risk by buying now? And I was saying, for this company, for Tesla, one of the strongest companies in the world, go look up Tesla's Altman Z-score if you don't believe me. Compare it to any other company you want, not just auto companies, any company, and see where Tesla ranks as one of the world's strongest, healthiest companies financially. The greater the potential return on investment, the lower you buy. Buy low, sell high is all this stock was supposed to be, all this tweet was supposed to be saying about Tesla stock in particular, not saying that no matter what stock is down, you should go buy it because it's a better return on investment. Okay, and you know, tweets are a confining medium. You only get 280 characters. You can't put every disclaimer in every time. People would find that annoying and repetitive and boring if you did that on Twitter. So here's a tweet that I thought would be helpful along these lines. What moves a stock in the short term versus the long term? And you can just pause this table and look at it. In the short term, nobody knows what the stock price is going to do. In the long term, the stock market is a weighing machine. In the short term, it's a voting machine. In the long term, it's a weighing machine. If you grow revenue, if you grow profits, and if you pay dividends or do share buybacks, your market capitalization is going to increase. This has been proven over many, many, many market cycles, over many, many decades. Bull markets usually last longer than bear markets, and the stock market goes up over long periods of time. Okay, so I will flip back to Twitter and scroll down to show you the reply that I left for Brad which is no money for hashtag Carvana. Sadly, I blew it all like a dummy on Tesla in 2019 when you were advising Tesla Q to short it, your friends in Tesla Q, because you were telling them total demand for Tesla cars was 325,000 units per year, not per quarter, per year. And all I have to show for it is this stupid 1,400% gain. So when you short a stock, the most you can make is 100%. The stock can't drop more than 100%, so you can't make more than 100% selling it high and then buying it back low. That's the maximum return. The maximum risk is unlimited when you short a stock naked, which people were doing back in June of 2019, right? Tesla Q and other short sellers of Tesla got their faces ripped off shorting the stock at what is today less than $12 and then having to cover it at some much higher price than that. So they could have lost 500%, 1,000%, 2,000% of what they originally sold that short position for when they had to buy those shares back and cover. So I asked him how his 2019 short position worked out, fully knowing the answer, and dropping a screenshot on him of a thread that he sent out November 13th of 2019. So let's go through that. The first tweet of Brad's thread from 2019 said Tesla building Gigafactory 3 in Shanghai at the peak of auto demand in China was a stupid enough idea. Now Musk announces a Gigafactory 4 in Germany, where labor costs are the highest in the world and manufacturing rules are strict. Let's see just how idiotic this harebrained scheme is. So that's the intro to Brad's thread here. He's going to illustrate for you that whatever you forecast, it will be wrong. Now, either you'll be wrong by a little bit, or you'll be wrong by a lot, or you'll be wrong directionally. Let's see which kind of wrong Brad was. Tweet 2 in the thread, here is average monthly demand for Tesla by major region this year. China 3,000 units, EU 8,000 units, US 15,000 units. Annualize all of the above, and you need only 325,000 units in annual capacity. Yet, Fremont plus Gigafactory 3 plus Germany will amount to 800,000 of capacity. So what are these? These were the sales numbers in 2019. So the assumption Brad was making here is there's no more demand for Tesla than what they're selling this year. Tesla can't grow from here. So let's look at what their historical sales have been, and let's annualize that, and let's say that's the maximum number of vehicles Tesla could sell. I'm going to flip back over to my PowerPoint and go to the next slide and update you. So here's Tesla production by quarter for the most recent 5 quarters, and here's Tesla deliveries by quarter for the most recent 5 quarters. 3 out of those 5, Tesla was selling more than 300,000 vehicles, and in one of those quarters, the most recent quarter, they sold more than 325,000 vehicles and produced over 365,000. So we can pretty conclusively rule that Brad was wrong about you only need 325,000 in annual capacity. Ouch. That's a wrong tweet right there. All Tesla has in the pipeline is the Model Y, which will cannibalize most of Model 3 sales. So I have another exhibit here. So these are the best-selling plug-in electric vehicle models worldwide in 2021. So last year, the Tesla Model 3 was the #1 selling EV in the world with just over 500,000 units sold. And the Tesla Model Y was the #3 best-selling EV in the world at over 400,000 units sold. What's this one in between them in second place? It's the Wuling Hongguang Mini EV. This is a microcar EV that makes the Trabant look roomy. It has a starting price of the equivalent of about $4,200 US. It has no airbags. It could not pass US safety laws. And you can buy about 12 of them for what one Model Y costs. So if this chart were revenue instead of units, this item would not appear on the chart at all. They wouldn't make the top 10 at that selling price. These are luxury vehicles, the Tesla Model Y and the Tesla Model 3. leading against all of these budget cars. You know, BYDs are selling for about half what Tesla vehicles sell for, and making far less profit per vehicle. Right? This Hongguang Mini, Wuling Mini, is making almost no money at all, and without subsidies, it would be losing money. Okay, so that's the middle of tweet 3 here. Gigafactory 4 start of output reported to be 2021. These cars are getting old. Model 3 will be stale in Europe by 2021. Well, let's check out the European sales. So this is hard for you to read, so I'll orient you to what's going on here. These are the years at the bottom, and this is cumulative battery electric vehicle sales in Europe is what this chart is. So 2017, 18, 19, 20, 21, and then year-to-date 2022 here. And this is for the 14 countries that are tracked at eu-evs.com. So the order of the legend up here, so that the y-axis is hundreds of thousands of battery electric vehicles registered with these nations' governments. So this is 500,000 right here. Tesla is the only automaker that has passed 500,000 cumulative BEV sales in Europe. And the legend here goes in order of ending position along the right side of the chart here. So that's Tesla. This is Volkswagen. That's Renault. This is Hyundai, then BMW, Kia, Nissan, and Audi. So Tesla's number one. Who's gaining? Is anyone gaining? Is the rate of growth by any of these companies challenging the rate of growth for Tesla? In my view, it is not. Okay. So that's a failed prediction there. What happens to Fremont? It has 500,000 in capacity and will operate at only 72% of that, so less than 400,000 per year. Even if Tesla reaches the low end of delivery targets this year, 150,000 of Model 3 and Model Y capacity in China and Germany each would leave Fremont making only 100,000 at best. That's a wrong tweet, folks. Wow, so he's taking his less than 400,000 and then he's subtracting 150,000 from China and subtracting 150,000 from Germany, saying, well, Tesla can't sell more than 400,000 per year. So that leaves only 100,000 for Fremont to make, at best. Well, let's check out the production capacity here. This is from Tesla's latest earnings release. They've got California, which is Fremont, making about 650,000 vehicles, including 100,000 Model S and X, a little over 500,000 Model 3 and Model Y. Shanghai making more than 750,000. This is a lowball figure, folks. Last month, the Shanghai factory made more than 80,000 Teslas. And if you annualize that, you just multiply it by 12, you get about 1 million vehicles, even if Tesla doesn't improve the production rate from where it was a month ago. And they show Berlin and Texas as just greater than 250,000 each. We don't know what the true production capacity from these factories is yet. Cybertruck is tooling and will begin deliveries next year. Semi is in early production and will start selling vehicles before the end of this year. And Tesla's got Roadster and Robotaxi and others in the pipeline for future years' development. All right. Most EU rivals have Eastern European plants which are cheaper, but the underlying question is, why build a local plant at all if demand is not so hot for Tesla in EU? So demand cliff, the growth story is over. Tesla will never be able to find more than 325,000 buyers per year was what Brad was advising people. He was saying, hey, you should go short Tesla because this is the most they'll ever sell. Also, if ramping up Gigafactory 3 and 4 could lead to a write-off of Fremont, has this been added to the total cost of Gigafactory 4? So let's go down, take a look at China sales. So this was 2021. Tesla was in second place behind that Wuling Mini. cheapest EV in the world. They sell a lot of those, but not for very much money, revenue, or profit. With BYD right behind in 2021. Here's a chart from year-to-date June of this year, 2022. BYD's in first place on this chart because they're counting plug-in hybrid electric vehicles. What kind of EV is that? It's the kind that has a gas tank and an internal combustion engine in it and a tailpipe that emits pollution. So they're counting that on this chart. If you count that, BYD's number one. If you exclude the kind of EVs that have internal combustion engines in them and aren't zero-emission vehicles, then Tesla's number one by a lot. Look at the green bars here. I mean, BYD would still be in second place with this green bar. But I mean, one of these companies doesn't even have a green bar. They only make plug-in hybrid electric vehicles. That's CHJ. But they are beating Toyota, which has only this thin sliver of green bar, which must be the BZ4X before they recalled it for having wheels that fall off. And here's market share of Tesla vehicles by region worldwide. So the claim is, hey, Tesla's losing market share all around the world. Well, here's the data. If you look at what the market share actually is in North America versus Europe versus China, this is per Tesla's most recent earnings release. Back in 2019, the US was at about 1%. Europe was at about 0.5%. China was way less than 0.5%. What's happened since then? China has grown past 0.5%, past 1%, past 1.5%, almost to 2%. What's happened in Europe? They're up past 1%, past 1.5%, almost to 2%. What's happened in North America? Up from 1%, past 2%, past 3%. This is the figure of merit. It's what is your market share of total new passenger vehicles sold, not of EVs sold, because legacies are slowly converting from internal combustion engine sales to EV sales, and as they do that, they are cannibalizing their own internal combustion engine sales with every EV they sell. So yes, the world is transitioning to EVs. Tesla got there first. Tesla owns leading mind share of the electric vehicle and the luxury EV market. Everybody who buys a luxury EV is going to compare it against the Tesla to see which one of these is better in terms of performance, in terms of range, in terms of safety, in terms of technology, in terms of features, in terms of ability to go on long trips with a supercharging network. And make their decision, right? So is the growth story over? No, it wasn't in 2019, and it isn't now. The world is transitioning to electric vehicles, and Tesla will be a leader in that market. So if you had sent all these tweets, how embarrassed would you be, right? Like, there's a lot of wrong predictions in this screenshot to be ashamed of, and you might expect Brad to take an apologetic, conciliatory, pensive tone in apologizing for the people he misled into shorting Tesla with these wrong tweets. What did Brad actually say? He said, most of my 2019 tweet on Tesla was spot on. Most of my 2019 tweet on Tesla was spot on. EU demand for Teslas is weak. China is even worse. So this is what happens when you're in an echo chamber and you're not looking at the data, and you become dogmatically married to your belief that Tesla is a fraud and they're going to go bankrupt and the numbers are all fake, right? Yeah, so Brad still thinks he's right, and that's why he was this week's Who's Hating Hard on Tesla Today featured hater of the week. And we'll check back in with Loki, see how he's doing. He's still doing okay. And I will outro and say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, you could go ahead and subscribe to my channel and ring the notification bell to get alerted whenever I post fresh content to YouTube. I'd like to thank executive producer Kathy Kitchler and new executive producer as of this week, Halter Ferguson Financial, both of them support my YouTube channel. They joined at the highest support tier and as such have earned a thank you as executive producers for every video. And I will see you in the next one.